So today I'm going to share with you, right, one of the most simplest approaches ever in the stock market, right? So if you're anything like me, you trade options, right? And the goal of being an options trader is to trade the market, is to understand the direction of the market, right? And to understand the direction of the market, there's a couple things you need to understand, right? You need to understand who's in control of the market, right? You need to understand the momentum of the market, right? You need to understand the highest probability scenario, right? So today in this lesson, I'm going to show you, break down to you where my philosophy comes from, right? My philosophy is the pint numbers, understanding the previous day high, the previous day low, the previous day open, and the close, what we call end of day. Where did all this come from? Why did I become so passionate about it, right? So it all came from a strategy, right? A very simple strategy called the gap fill. And today in this lesson, I'm going to show you the trade we took on Friday live with the team, right? And how that helped me put on a trade that was very high probability and how to understand the market, right? And I'm going to show you the exact criteria I use to pull the trigger, right? But back to what we were talking about. What is the gap fill, right? The gap fill is basically post-market and pre-market. There's price action. This price action causes price to gravitate, right? So SPX is going to paint it very clearly because there's no pre-market data, right? Without the pre-market data, you could see the previous day closed at this price. This price is 5591. And now the open, right, opened at 5613. So we get this gap, right? You guys see this gap here. There's a gap in price. So now there's a bunch of different ways to look at this, right? But the moral of the story, what's going to serve you? What's going to help you make better decisions in the market? It's the fact that gaps often get filled. I didn't say always get filled. It's not a guarantee that it's going to get filled, but you have to understand how the market works, the dynamics, the auction. And once you do, you'll start to understand that the probability of a gap getting filled is very high. Okay, but how do we know it's a high probability setup still, right? Because like you said, Josh, it doesn't always happen. Well, you're gonna have to look for certain criteria. And that's what I'm going to break down to you today in this lesson, right? So let's bring it back, right? So when we approach the market every single day, right, I want to show you guys, we highlight the critical levels, right? The critical levels are previous day low, end of day, and previous day high, right? We can also highlight open print from the previous day, but I like to highlight open print from the current day, right? So my four levels are previous day low, end of day, and previous day high. That doesn't mean that I don't look at open print from the previous day, because I do. And look, you can tell it was a good idea that I did because that price reacted well to price action, right? Well, price action reacted well to that level, right? So that's how I map out my day. I go, okay, here's my pint numbers. Now I need to understand, right? What's going to happen today, right? Is price going to rip to previous day high? Is price going to rip to previous day low? Is price going to rip to the level below that, right? Well, to understand that, I got to identify that and put all of that on my chart. Okay, so then the day opens, right? The market opens and we start getting some price action. Now open print is established, right? This is on the 2-minute time frame, by the way. So first thing I'm going to point out here is we're opening above the 50 EMA. We're getting some price action, right? And now we're coming down, right? We get these failed attempts to the highs. And now we come down and we fall below the 50 EMA. That is one of my first criteria, right? My first level of criteria, meaning I do not put on a trade unless these three things are there. Number one is critical level. I always make a trade off either a critical level, meaning I enter off the level or around the level, or I target the critical level, right? That's my first set of criteria. Number two is the moving averages. I need to have price reacting to my moving averages. Moving averages are literally a gift from God, right? As a day trader, they help us understand not only the trend, but the strength of the trend, the direction of the trend, right? Is the trend healthy? Is it unhealthy? Are we extended from the moving average? Are we hugging the moving average? All of this is very important, right? So number one, critical level. Check it out. We fall below open print, right? So now I know buyers were here previously in the day, right? They showed up here, they showed up here, Now price has sold off below open print. Is this bullish? Absolutely not. This is not bullish, right? This is the first sign that sellers are coming into the market. So now let's bring it back to the gap fill, right? We have all of this liquidity below open print, right? We have all of this. This is all orders. There's orders here. There's a lot of, liquidity here that tends and often gets filled based off statistical reliability. What does that mean? That means I've done my research. I've done my back testing. I've literally documented endless amounts. Let me show you in the Discord. I have documented years of data on the gap fill. And this is why when traders ask me, like, Josh, how do you have so much confidence when you enter these trades? Well, this is why. I've literally been documenting every single trade that I've taken for the last 3 years. And I put all of it into, look at this. This trade was a 1,400% return. This was in the day before, right? Trading the gap fill, right? You see here, bought contracts for $45, sold them for $670 off the gap fill, right? We're gonna make another video on that. But guys, this is all the data of all the gap fills that I've traded in the last 3 years. Once again, this is on the Discord. This is for premium members. Any members that want to join the Discord, click the links below. You get access to all this data. This data is extremely important. It plays a mega role in your development as a trader, right? So basically, this is where it all comes from. Notice the gap, price rips past open print. Look at right here. It's happened so often. Look at this, open print right here. Price rips above it, break, we retest the open, you take the market long, and you capture the gap fill. There's literally so many times. Another one, open print right here. Price comes down, plays around with open print, sells off, fills the gap, right? Statistical reliability, guys. Look at this one, another one, open print at 43922, right? Price sells off, comes up to it, buyers take it, take the market long, target the gap fill. Literally, guys, over and over again. I literally have 3 years of trading data in here. Right? So, my bad. Didn't mean to get off track. But this is why I make these videos. I need you guys to understand this. The gap fill strategy has literally changed my life. Right? But just because you understand it doesn't mean you could trade it. Right? You really need to understand your criteria. Right? Number one, why do these trades work for you, Josh? Well, it's because I'm trading off open print. Right? I'm waiting for the market to make its decision. I'm waiting for the market to react to the critical level, right? What do you mean when you say react? I'm talking break, retest. I need price to break the critical level and retest the critical level. This tells me that it was significant, right? Buyers did control it. Now they lost it. Now price is coming up and retesting open print. Okay, when do you get in this trade? When do you actually pull the trigger, Josh? This is the $1 million question. You see this little candle right here, right? This green candle. Notice, price comes up to open print, and now we're reacting to it, right? We sell off, right? I don't just enter. I wait for the green bar that gets ignored, right? So on the 2-minute time frame, this works very well. You see that this bar, some buyers showed up here, right? They showed up, they pushed price into my EMA cloud, and then sellers rejected, blowing out the bottom of that 2-minute candle. Once this candle blows out the bottom of this candle, I'm in the short play. My stop loss is right above it. Now I have an understanding, right? This is what the chart looks like, right? The chart literally looks like this as I'm entering my trade. And I'm going, okay, buyers failed at open print. We're below the 50 EMA. We got beautiful market structure. That's the third step of my criteria is market structure, right? Critical level, moving average, market structure. Burn that into your brain, right? Now I have what I need to put on my trade targeting end of day, right? So this is where we took the market short. Price started to sell off, right? Now I let my moving averages do the work, right? I go, okay, now price is selling off, right? We do some profit taking, right? Because this was a glorious move. Now I'm still targeting end of day. What do I need to see, right? Well, first things first, I'm going to bump my stop to this level of structure, right? Because I don't want to give any of my profits back. And remember, I'm constantly evaluating the market from a probabilistic standpoint, meaning what has the highest probability of happening, right? So when I'm selling off here, I know if price revisits 5606, right? at that point, if buyers take this, right, if price gets above this 5606, I no longer want to be in the trade, right? I'm done. I don't want to risk the pullback to open print. I don't want to let the 40 or 50% that I'm up be given back, right? Instead, I'm going to tell myself I'm bumping my stop down to market structure. I'm going to keep it tight because I do not want to give money back, but at the same time, I got to let the market breathe. And I don't want to make decisions based strictly off P&L, right? I want to make decisions based off what the market is telling me in live time. That's how you do it. You use market structure. Notice here, guys, what do we get? We get another beautiful green bar that gets ignored. This is where we then added to the position, targeting end of day. Because once buyers try here and sellers blow the bottom of this candle out, I know this little space right here, this is a very high probability area that's going to get filled, right? So once again, using market structure, using critical levels, using the moving averages to then understand that the market's most likely going to sell off down to end of day. And that's what we got. We got a beautiful move down to EOD, right? This was a phenomenal trade. Very simple, right? Once again, using the critical levels, the moving averages, and the market structure, right? So, and I thought it was crazy, right? Price ended up going down all the way to PDL. And to really bend your mind, look where price ended. All the way up at previous day high. Guys, I can't make this stuff up. Pit numbers till we die, right? If you guys want to join the team, click the links below. I hope you guys enjoyed this lesson. Make sure you hit a like, subscribe, do all the YouTube stuff. And until next time, stay blessed. I'll see you in the next lesson.